Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. A lot has played out as we've expected here this week. A new wave of selling hit through the S&P, through stocks. The S&P stalled 4183, 4186, major four-star resistance. Same thing with the NASDAQ, rare major four-star resistance, 13,380 or so. And then we saw the selling that bleed lower late in the session yesterday. Stuff like that doesn't really bottom very quickly, and that's why we have here today. But again, it's something we've been cautious about. We've been cautious for this unfinished business at 4010, 4020, big strong support. Everybody's looking at that 4010, 4020. That's why the market keeps responding. In front of that, people are stepping in. We used this morning as an opportunity to lift our hedges on the wealth management side, as well as some shorts we've had on the trading side here in futures, different ways of hedging other exposure as well. So we think that the market is going to go through a little bit of a bottoming phase and a lot of support at 4010, 4020. We're playing the NASDAQ long from a trading perspective here in futures, but really I've been talking about it quite a bit in the Morning Express. As you're looking out in your investment landscape, you don't want to be overloaded on tech, and you want to be very selective. We've been trimming some tech. We've been using that as an opportunity to add in the financials this week. We've been using that as an opportunity to add in industrial infrastructure names that we put on here today. If you want to know more about that, feel free to contact us. But again, we moved up 4100, 4107. The S&P is going to be some good resistance there. We got to get through there in order to move higher. And again, they got that support below. So see how we finish out the week. But things are starting to play out as we've expected here. But we'd like to see now a little more risk on turn. But the dollar higher and rates are higher after the Fed. The Fed, they're still saying there's a lot far from their goals, but they may start the taper conversation at the next meeting. And the markets didn't like that too much. So the S&P wave lower. You saw the dollar strengthen, the rates move higher as well. So the 10-year, the prices are trading right around 32. One of the ways we've been playing that, I've talked about it, I think here, we're short call spreads in the 10-year because we really think that the 10-year is really, it's not going to go very far. It's not going to move very far, but we would like to sell and bring in some premium on those rallies. Overall, though, you're seeing gold fall back with the dollar strength. You're seeing gold fall back as well due to the 10-year. Gold got higher early in the session, 1890s. Big three-star resistance up there. Looked like it was going to maybe get above there. The miners as well moved pretty good, but falling back, strong support, 1840, 1850 in gold. Keep an eye on that. We like platinum in this 1180s area. 1190s has been a good area to buy. We've been buying in front of that. Silver's been holding okay. It didn't respond as like gold did when it moved higher, but the metals, keep an eye on them. Dollar strength is going to be crucial. If the dollar continues to strengthen, it's going to weigh on the metals. And then crude oil is trying to bounce back and traded lower. There's a lot of support, 60s to 61 area. Crude oil market's responding so far. We're using this dip here to buy into some weakness very cautiously. I don't over leverage. We don't over leverage here. That's one of the things we do very well is we size very well. So we like this in crude. There's some attractive things going on. Give us a call. We're here to help with anything on the board. 312-278-0500. Remember, though, futures trading involves substantial risk of loss. It is not suitable for all investors.